Imagine this scenario. You've been saving for years for a house. You finally find one that you like, but the payments are way more than you can afford or feel comfortable with. And suddenly someone says to you, hey, what if you could have 50 years to pay it off? That sounds like relief. It sounds like some promise of ease. That sounds great. Today, we're going to dig into that promise and what the trade offs really are, because the idea of a 50-year mortgage put forward by Donald Trump's housing team is being pitched as a solution to housing affordability. But like most big promises, there are hidden costs. And as Christian leaders, you and I must look not just at the monthly payment, but at the long-term stewardship, the equity, the freedom, the covenant we make when we sign on. Let's walk through the pros and the cons together. Here's the context. For decades in the United States, the standard home purchase vehicle has been a 30-year mortgage. Some people maybe do a 15-year mortgage, but for homes, usually 30 years. It became dominant after the Great Depression and the New Deal era. But now, with home prices high, interest rates are elevated compared to what we've seen in somewhat recent years, so in the past couple of years, 6 to 7% range. The average age of a first-time home buyer is getting up to about 40 years old for a first-time home buyer. And so many Americans feel locked out of the dream of home ownership. And so the Donald Trump administration is proposing a 50-year mortgage, a much longer amortization period, meaning lower monthly payments, more time to pay it off. The director of the Federal Housing Finance Agency, FHFA, Bill Pulte, called it a complete game changer. For example, on a median-priced U.S. home, $415,000, assuming a 10% down payment and an interest rate of 6% or 6.2%, a 30-year mortgage would carry a monthly payment of $2,288, about $2,300. Stretch it to 50 years, and that payment drops to $2,022. So, yes, on paper, the monthly payment does go down, and that's the promise,